Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Thursday, April 4th, 2024. Hope you guys are having a great day. For us in the mastery, the credit spread mastery class, probably the best day we've had since I started this, and I'll go over that a little bit more. But we saw a massive sell-off today, and even in the free reports I've been sending out, and members know, they should know, that we've been looking at this time frame all the way since November that this was going to be an intermediate term top. Now, we still have a little bit of a window that's open, so maybe, I don't know, maybe Powell comes out and cuts rates because the market was down so much. Who knows? But in any case, there's still a window if they ever did want to try back. I don't think they're going to, but in any case, it's still there. But I've been saying that when we get that first break, you really need to pay attention to it because it could turn at any time. And was today the start of it? I kind of think it was, but I'll leave the door open if they want to try higher. Intermediate term, we kind of know that any kind of rallies from here that move up are probably going to have to get sold into. On a daily basis, we just kind of make our trades and do what we're going to do. So whatever the market, throws at us each morning, we just regroup and do what we have to do. So this was the first big drop here. We had a little rally off of it. Came back. It failed yesterday after being up. It ran into my zone 3 here, and from there came down. And then we saw a massive gap up. And in the morning notes, I had said I just don't really believe this, this gap up, because it was, at least the excuse that the talking heads were saying was because of the jobless claims that came in, and they were the highest since January 2023. So, algorithms buy that, saying that, okay, well, the Fed's going to cut rates. Now, where I started kind of poking holes in that was, this rally started back in, going all the way back into October. And, the reason for the rally was, that the Fed was going to cut 6 times, not the 3 or 1 that they're getting excited for now. So this whole thing started when, everybody was anticipating 6 rate cuts. This was where we were looking for the low. This is the part that surprised me, and I think surprised a lot of people. But in any case, once we broke through these highs here, the dynamics of the market changed, and you really don't fight it. You just let it go and play its course. But from there, we've been saying it's been the April time period that we were looking for the top, and this is going all the way back in November that this time period was picked, and this is exactly what happened. So it's I think maybe today caught some people by surprise. Me personally, I wasn't really expecting this. But there was reasons why I wasn't really believing this. One is, like I said, this market started rallying from the, October lows because everybody was all juiced up that we were going to get, 6 rate cuts. And now, okay, well, it's going to be 3 rate cuts. So the fact that we had jobless claims that came out and people were excited because there's going to be a rate cut, no, it doesn't, something didn't smell right. And to me, and if you go and look at the morning notes, I said it kind of has the look and feel of a bull trap, and we used it, and we actually used it at almost the exact top, and I'll show you the reason why. That is where we were making our trades, and as I said, it was one of the best days we've had. I think just trading one contract, which some of our members do that with the credit spread thing. I think they made close to $4,000 or $5,000 today, and depending if they got in on another one of the trades, because in my account, what I did it was $50,000, and believe it or not, if I would have held it because it was a straight out put position I took on the S&P, if I would have held it, it would have been worth $93,000. But I was very happy with that, and I just let things go. But like I said, it was a fantastic day overall. And let me show you some of the reasons why, we were fading this. So I'm going to give you some of the, information, AI reports that I read and where I come to my conclusion on what to do for the day. So I'm going to pause you right now, and I'm going to pull up one of them right here. So hang on. All right, so this is one of the reports I get, and these are alerts, and it's a whole AI system that goes through. I can pull up all different things, but this is what came out today, and what it was saying. Let me just move this a little bit. So what today was basically if Thursday opens below zone 4, which I will show you in the charts, and above zone 1, then the intraday low will be below Thursday's open. So we gapped up today. So this made this really kind of nice, because when we gapped up, the AI is predicting with 78% accuracy that the S&P was going to close below these lows. So I just had to kind of wait for where it was, and what I want to show you are the zones. So these are based off of options, and basically we have 1, 2, 3, and this is zone 4. So what it was calling for was if it opens above zone 1, which we did, and it makes it up to the zone 4, then it's going to be closing below the opening trade. So when we are up here, we are at the resistance levels that I pointed out to everybody, because this was our one of our options pivot lines. And we were there, and once we got this little dip down and I was expecting to move up, we started getting sell signals. So this is when I started putting out my alerts to start shorting the S&P up here. And it was dangerous, but the thing is that I just didn't believe that we were making new highs off of this information. So we started taking our trades, and this is one of the ones that I put out. And hang on one second. So I did went through on my other, AI system to figure out what would be the best type of trade to make up here. Because the thing is that I talk about the the iron condors or the credit spreads, but when you're in a volatile market, those aren't going to work. You're going to get stopped out, and you're going to get stopped out with probably a significant loss, because when we get these big drops and these big rallies like this, you're going to get stopped out, and because the implied volatility is going to spike or drop, the stops that you have in place that normally would be at break even, they're not break even, but because by the time that gets down to where your stop is, the option prices are skyrocketing, so you get hit with losses. And we have our stops in place, and I learned my lesson on that part, because it was going so smooth where you just placed your stops the way the system was saying it, and it was good because we didn't really have any volatility for a long time. So it was a simple trading. But once we started getting volatility, it happened twice, where I learned pretty quickly that if there's going to be volatility in this market, do you stay away from the credit spreads, because you're going to get smoked on them. So when we were up here, I didn't want to do a credit spread because I kind of had a feeling that we were coming down, so we just would have been stopped out and would have missed a great trade. So going back to this thing, what I decided to do is a put spread. And as you can see, it was a 353 risk. So this is for one contract, and the max gain was 2650. So that is what we put out on it, and the next trade that I said to do, and I'm going to actually show you the text link. So this is a new piece of the thing, is where I'm sending these alerts out via text message. So the first one was let me see if it's here. I'm going to expand it, and this is pretty early in the morning at the open, and I said it's a little bit risky, but I'm not against selling a put spread up here, and it was very small. It was just this was just dipping the water, touching your feet and the toes, because it was, it was early on. So, you could take some just in case the market would have reversed, which wouldn't have surprised me, or you take it and then you build another position if it kept going. So this was actually the trade setup here, and it was basically this. This was it was a put spread, and it was for hang on one second, let me make this bigger, 52, 55, 52 40s. So this was looking for the market to go down, and all it had to do is be below 52.44, which is pretty much right near where we were. So that one was a little, it was a little underwater, nothing crazy. But then here's the next. And what I basically had said was, here's what I'm doing, and this was when we were kind of near the highs, is I'm going to try to protect myself, and I'm going to do a call spread. So that's when you're going to get paid for it. So it was a very minimal payment, but remember, we were only risking 322 if that one trade went against us. So I was buying the 52.50 puts and selling the 52.20. So that's your put. That's your debit put. So from that's what opens the door for a lot of money. And I said, if we get a sell-off, we do great, and if we rally, then the call spread is going to cover that. So these are actually the snapshots. And this is what I was talking about with the call spread, where what we were doing is we were going long the 52.55s and selling the 52.60s. So it was going to cost us $168, but we were going to get that 332 protection. And if you remember, that was the exact cost of what that the put spread was. So we were covered no matter what the market did, and obviously this was the final trade on it. This was which one was this? This is the put spread. Okay, so I closed it at 7,000. They probably made 700 if you did one, but we also had 3 other trades in there, and I'll show you in 1 second. So the other trade suggestion was to just buy and open a 52.40 put, and you can see I got filled at 370 and 325, and you can see what I closed it for, $51.60. So $50, almost close to $50,000 on that. If I would have held it, this is what I'm talking about. It would have been $92,000. So anyway, those are the trades that we went through, and it's it worked out really, really well. And obviously, I wasn't expecting this type of sell off on it. So we did get a little lucky. I was planning on it coming down to these levels. But in any case, we had the reasoning on why to be looking short. We knew the pivots here, and all we had to do is enter the trade. So this is, it worked out fantastic. And right now, for tomorrow, we're at a support line right here. I wouldn't be surprised to see a bounce and see us get someplace up into the say the 51.80, maybe even try to test up at the 52.15. I think that's a little bit too big of a rally, but I'm going to leave the door open for anything. We don't have any buy signals, so up, down, and then maybe up again would make the most sense. And we're just basically pretty oversold. So this is another support area, 51.53. So again, seeing a bounce tomorrow would not surprise me at all. And I'm leaving the door open for it. I think if it bounces, then you could probably take some kind of long scalp, but I'd probably be waiting to the end of the day and look to take another short position. But I'm going to leave the door open to do it what the market tells me tomorrow. So with that, that's the end of this. I gave you guys a free report as well, and I hope you guys have a great night. And if you guys are interested in this credit spread mastery training, send me an email, and we can talk about getting you in. So with that, have a great night, and I'll talk to you guys in the morning.